Are you tired of hearing terms like Bitcoin, Ethereum, blockchain, and wondering if you're missing out on the next big financial revolution? Or perhaps you're hesitant because of the countless headlines about scams and market crashes. Cryptocurrency is one of the most talked about investment opportunities today, but is it really worth your time and money? Well, you're in the right place because in this video, we'll break down cryptocurrency in simple terms, explain how it works, and go through the pros and cons of investing in it. Stick around until the end, and you'll have a clear understanding of whether cryptocurrency is the right choice for you. What is cryptocurrency? A simplified explanation. Let's start with the basics. What exactly is cryptocurrency? At its core, cryptocurrency is a digital or virtual currency that uses cryptography to secure transactions. Unlike traditional currencies issued by governments, like the dollar or euro, cryptocurrencies are decentralized. This means they aren't controlled by a central authority like a bank or government. Instead, they operate on a technology called blockchain, which acts as a public ledger for all transactions. Think of blockchain as a giant, unhackable notebook shared across a network of computers. Every time a transaction happens, it's added to this notebook, and everyone on the network can see it. Popular cryptocurrencies like Bitcoin, Ethereum, and Ripple use this technology to ensure security and transparency. But here's an important distinction. While cryptocurrencies are designed to function as money, not all of them are used for buying and selling. Some are used for smart contracts, decentralized apps, or other technical purposes. Now that you understand the basics, let's explore why people are so drawn to cryptocurrency and why others remain skeptical. The pros of investing in cryptocurrency. Number 1. High growth potential. One of the most compelling reasons people are drawn to investing in cryptocurrency is its incredible potential for high returns. Let's take Bitcoin as a prime example. Back in 2010, the value of one Bitcoin was less than a single dollar, around $0.08 to be exact. Imagine if you had invested just $2 back then and purchased 25 Bitcoins. Today, with Bitcoin's value soaring to an incredible $102,891, your $2 investment would now be worth a staggering $2,572,275. That's over $2.5 million from just a tiny initial investment. Such astronomical growth highlights why many see cryptocurrency as a gateway to building immense wealth. Those early adopters who had the vision and patience to hold on to their investments experienced financial gains that most could only dream of. This isn't just unique to Bitcoin. Many other cryptocurrencies have demonstrated similar growth patterns over the years, driven by factors such as technological advancements, increased adoption, and strong community support. For example, Ethereum, initially valued at a few dollars, became a cornerstone of decentralized applications and grew significantly in value. The limited supply of many cryptocurrencies combined with growing demand contributes to these massive price surges, attracting investors hoping to capitalize on these trends. It's important to keep in mind that this high growth potential comes with significant risks. Cryptocurrencies are known for their extreme price fluctuations, influenced by market sentiment, regulatory news, and technological updates. Don't worry, we'll cover this volatility in more detail later. But for now, let's shift gears and explore another key benefit of cryptocurrencies: how they break down barriers and provide accessibility to global financial systems. Number 2. Decentralization and financial freedom. Cryptocurrency gives people control over their own money. Unlike traditional banking systems, where governments and banks oversee transactions, cryptocurrencies operate independently of central authorities. This decentralization is particularly beneficial for people in countries with unstable economies or restrictive banking systems. For example, in countries experiencing hyperinflation or currency collapse, cryptocurrencies provide an alternative store of value. People can protect their wealth by converting their local currency into Bitcoin or stablecoins like USDT. Moreover, anyone with internet access can participate in the crypto economy, regardless of location or financial status. But while financial freedom is empowering, it comes with responsibilities, which we'll touch on when discussing security risks. Number 3. Transparency and security. Thanks to blockchain technology, cryptocurrency transactions are incredibly secure. The decentralized nature of the blockchain makes it nearly impossible to alter or hack transaction records. Unlike traditional banking, where you rely on a middleman to verify your transactions, blockchain ensures peer-to-peer transparency. This transparency builds trust among users and reduces fraud, as every transaction is permanently recorded. While this technology offers great benefits, it's not without its challenges, particularly for new users who may find it overwhelming. Now that we've looked at some advantages, let's balance the discussion by diving into the drawbacks of cryptocurrency investment, the cons of investing in cryptocurrency. Number 1. Volatility, the double-edged sword. The same factor that makes cryptocurrency attractive, its rapid price increases, also makes it risky. Cryptocurrency markets are infamous for their volatility. Prices can skyrocket one day and plummet the next. For example, Bitcoin lost over 50% of its value during the 2021 market crash within just a few months. Such unpredictability can make it challenging to plan your investments. If you're someone who can't stomach the idea of losing half your portfolio overnight, cryptocurrency might not be the best choice. Speaking of unpredictability, let's discuss another concern. Number 2. Regulatory uncertainty. The legal status of cryptocurrencies varies widely from country to country. While some nations like El Salvador have embraced Bitcoin as legal tender, others, like China, have banned cryptocurrency trading outright. This inconsistency creates uncertainty for investors, as governments could introduce new regulations at any time that might impact the value or usability of cryptocurrencies. This brings us to another critical downside: security risks, even with blockchain's advantages. Number 3. Scams and security risks. While blockchain is secure, the crypto space is still rife with scams, phishing attacks, and hacking incidents. New investors are often targeted by fake investment schemes or fraudulent exchanges. Additionally, if you lose the private key to your crypto wallet, you lose access to your funds forever. Unlike banks, there's no customer service to help you recover lost crypto. This lack of safety nets makes cryptocurrency a high-risk investment for those unfamiliar with the technology. But before we wrap up, let's look at how to approach cryptocurrency investments wisely. Tips for smart crypto investing. When it comes to investing in cryptocurrency, the key is to approach it with a combination of caution, strategy, and knowledge. The first and most important tip is to do your research thoroughly before investing. Each cryptocurrency serves a different purpose and operates on unique technology. For instance, Bitcoin is primarily seen as a store of value, while Ethereum supports smart contracts and decentralized applications. Understand the underlying use case, the team behind the project, and its long-term potential. Avoid jumping into the hype blindly. What may look like an opportunity could turn into a costly mistake without proper understanding. Always verify information from reliable sources and steer clear of promises that sound too good to be true. Another critical tip is to diversify your portfolio. Just like with traditional investments, putting all your money into one cryptocurrency is a high-risk move. The crypto market is incredibly volatile, and prices can rise or fall dramatically in a short time. By diversifying, investing in a mix of established coins like Bitcoin or Ethereum, alongside smaller, promising altcoins, you reduce the risk of losing everything if one asset underperforms. Diversification also allows you to tap into various segments of the market, from decentralized finance, DeFi projects, to gaming and NFT platforms. Balance your investments based on your risk tolerance and financial goals. Lastly, never invest more than you can afford to lose. The allure of high returns can tempt people to overcommit, but the crypto market's unpredictable nature makes it essential to invest responsibly. Set clear limits on how much you're willing to invest and stick to them. Use tools like stop-loss orders to protect your capital during price fluctuations, and always prioritize long-term gains over short-term speculation. Additionally, consider securing your holdings using cold wallets to protect against cyber threats. By combining caution with smart strategies, you can navigate the crypto space with more confidence and better financial outcomes. Is cryptocurrency right for you? So, should you invest in cryptocurrency? The answer depends on your financial goals, risk tolerance, and ability to stay informed about this rapidly evolving market. Cryptocurrency offers incredible opportunities for growth and innovation, but it's not without its challenges. Remember, investing is about making informed decisions, not following trends blindly. Now, we'd love to hear from you. What are your thoughts on cryptocurrency? Are you already investing, or are you still on the fence? Share your experiences and questions in the comments below, and don't forget to like, subscribe, and hit the bell icon for more content that helps you make smarter decisions. See you in the next video.